right. We're talking about companies now in this leg of the show. Thermax in focus after a string of order wins. Before we hear from Ashish Bhandari, Managing Director and CEO of the company, about their order pipeline and outlook, let me get in Anushi, who tracks the company, to set up that conversation.
Hi, morning, Tamanna. So for Thermax, what we are looking at is a 580 crore worth of an order win. And this is a particularly comforting one, considering that it's a strong H2 that Thermax is now anticipating. But just a bit on this order win, what we are looking at, they have secured a 580 crore of order from the Africa side of the business. And this is for a refinery and petrochemical complex in Nigeria. This pertains to with a delivery timeline of around 22 months as well. Do note that the order book position at the end of the second quarter, the order balance stood at about 12,300 crores, while order booking, that's the new orders, were up 6% at 3,551 crore. In terms of the second quarter results, now there was a bit of a weakness. This is for a second quarter that we are seeing for the company, showcasing a revenue downtick of around 5%, while margins were at 7%. But it's the outlook which is interesting, considering that they're expecting a 20% of a growth in terms of where the order book is concerned. And this is based on a strong inquiry pipeline that they have. So what's the kind of inquiry pipeline currently, and how much of that has translated so far is something that we should be asking about. Along with that, execution for the second half is also an important one, considering that they're seeing a bit of a revenue catch up in the third and the fourth quarter onwards, with the legacy issue now behind. So that would be another interesting area to play out for.
All right. Anushi, thanks so much for getting us those details. Ashish Bhandari, Managing Director and Chief Executive Officer of Thermax, joining us to talk about some of these aspects. Mr. Bhandari, thanks so much for taking the time. And we spoke not too long back after the second quarter numbers, and I appreciate that. And I remember quite a bit of what you were talking about in terms of some of those legacy orders ending in the end of this financial year. But specifically on this new order and the picture for the international businesses, how does that look? Does that look materially better compared with what you saw in the first half?
Hi, good morning, and thank you again for having me. Yes, it does look materially better. I've been saying this now for 3 quarters now, that our backlog of large projects is now, in terms of the opportunity pipeline, was looking better and better. It has taken maybe a quarter longer than what I would have expected, but you will see not just this, over the next couple of quarters, more wins as well. And this will be a mix of not just international, domestic as well. And these are all in sectors that are areas that we think are places that align with our strengths, with our capabilities, are limited in terms of, like in this particular example of the Dangote order. This is a repeat order for us. It is for a customer that we know and have worked with extensively. There is no civil, no construction. It is a modularized piece of equipment, high-end engineering, but all delivered out of our factories and our modularization plants.
And the margin profile, Mr. Bhandari, since a large part of the conversation over the last couple of quarters has been about those large orders with the margins being scrimped, what is the margin profile here?
So like I've shared it previously as well, there were a set of orders, especially government orders involving longer periods of execution, things like FGD, the NRL project that we are going through, with significant civil and construction. And those are the kinds of areas that we have been cutting back on. Most of the wins that you're seeing right now are more with the private sector, very well-defined terms and conditions, very well understood delivery periods, limited civil, practically no civil construction supervision. These are things that we know how to do well. The last couple of wins, Q1 and Q2, were both international. In the remaining part of the year, you will see the domestic portion coming back strongly as well.
That's interesting. Mr. Bhandari, hi, good morning. Tamanna here.
Good morning.
You know, when we last spoke, you were very candid that a rough quarter was a rough quarter. That was very well appreciated. Now, the issue with all of the legacy orders, do you see that winding down and resolving in Q3 and Q4? And you also mentioned that domestic orders will take center stage maybe in Q3 and Q4. Can you give us a little more color on that?
I can't give you color. You'll just have to wait. In terms of the orders, in our analyst presentation, we This time around, we actually shared the orders where we think, which are these legacy orders that you refer to. They're about 450 to 500 crores of our backlog. About half of it will clear through in Q3 and Q4. Half of that will carry forward to next year. And next year is the last bits of it, and then we are done with it.
Okay, and what is the kind of sort of relief in terms of margins you expect when you're done with it?
Look, I think we've been showing our industrial infra business, which is where a lot of this, in fact, all of this is showing up, and we've, as part of industrial infra, we've got one entity which is large enough, which is called TBWES. We've been sharing TBWES's financials as well separately, and you will see those are significantly accretive to the financials of industrial infra overall. All these new orders that we are getting primarily under TBWES. And so you can use that as a rough rule of thumb. But within industrial infra, which is right now 4 to 5%, I think at least 2 to 3% improvement in profitability is the minimum I think we can expect.
Right. Ashish, good morning. Hiral this side. In the last con call as well, what you'd mentioned is that your large international orders for boilers from the Middle East were likely to flow in the second half of FY26. So your current order from Africa, what does that take you to in terms of the international market pipeline? And the recent large order from Dangote as well, what does that mean when you want to scale up your international business? And the impact you see on margins, how margin accretive will these international orders be?
See, the international orders are accretive to the business. Yeah, plain and simple. They come with significant execution. In this particular case, the customer, if I may just take a step back, Dangote and Mr. Dangote is building the world's largest refinery in Africa. The first half of it resulted in what was at that time Thermax's single biggest order. It was north of $150 million. He's looking to repeat what was the first part of the refinery again. And in addition, there's a large fertilizer plant also that is envisioned. What we have received is just the first part of this project. There is a lot more to come as an opportunity pipeline. Of course, it will be competitive. The customer is somebody that we are working extremely closely with on multiple counts. Even beyond this, the international pipeline, as we continue to break into Middle East oil and gas companies and get qualified and increase our capability in pipeline, continues to improve. It won't be like suddenly a big thing shows up. It'll be staccato, but with each year, our capability to address that market gets better and better.
Okay. And Ashish, in terms of the projects that I spoke about that were supposed to come in the second half, have they been on time? Or is there any delay that has come in on the industrial infra side? What's the progress? And number two, the order book that you're picking up in terms of data centers, refineries, and the petrochem business.
So has there been a delay? Overall, I said when we started the year also that we had a big backlog. In fact, I've been saying it from Q4 of last year. So I would say there is a quarter's delay. Nothing that has moved out like for several years, and we had one loss, but that was all because of price, and we didn't want to lower our prices, and very, very, very determined on making sure that we do business that is accretive. And so with that, I would say, and of the questions that you asked, refinery and petrochemical, Q1 and Q2 are both refinery, petrochemical wins. Data centers, we have had some small wins. Data centers will not be large, and we won't report them. Both domestic and internationally, we have a reasonable pipeline of data centers that we continue to get success from.
Mr. Bhandari, I completely take that if you've not disclosed to the street or to the exchanges specific order wins, you cannot give us details on that. But directionally, where do you anticipate that you will end the year in terms of order book and the mix of export versus domestic?
I think both would be good. Yeah, the order book growth very confident of. And you can see Q1 and Q2, it looks like we didn't grow as much, but last year in Q2, we had a single 1,000 crore order. And in Q3 last year, which was our weakest order year, we had order book, we had 2,300 only, and Q4 wasn't that great either. So Q3 and Q4, you will see substantial strength in our order book, which then will start to get the revenue number to start going up as well. In terms of export and domestic, right now looks like on the project side and even otherwise, the export percentage is higher, but Q3 and Q4, we have a very strong domestic pipeline as well. So I won't comment on the export and domestic mix. I expect both to be good.
Mr. Bhandari, you talked about data centers. I'm just wondering, as a revenue source and as a vertical, what is the growth that you see in data centers for you?
It's look, we're starting from a very low base. It wasn't a area that is. And in terms of the three sets of products that apply out here, domestically, our cooling solutions and our water solutions are the ones that are relevant for data centers in India. Internationally, some of the boiler and the power portion also comes into play. When we have something distinct to share and report, we'll come back. But right now, I would say reasonable pipeline. And again, here, there is a domestic pipeline and an international pipeline, both of which offer interesting opportunities. I hope before the end of the year, we'll share some interesting bits on the data center side.
And we look forward to that conversation as well, as we did today. Mr. Bhandari, thanks as always for taking the time, and we appreciate the candor that you share with us.
Thank you.
All right. We're bringing you a lot of corporate action this Friday morning.